guys, welcome back to the channel as always. Guys, as you can see in the title of the video, today I am going to do a full tutorial of the Bybit leverage trading exchange for predominantly Bitcoin and some other altcoins as well. Guys, we're going to go from top to bottom in this video. I'm going to give you all the tips and tricks I use when I use Bybit, because I actually personally use Bybit in my trading every single day when I trade Bitcoin. We're going to go through all the tips and tricks. I'm going to show you exactly how you can deposit, use the exchange, use the leverage, use the charting tools, use post only, all of the little nigs and even the funding rate we're going to go through. So everything you need to know basically about Bybit in this video, we're going to go through it. Guys, and also right now in this video, so I'm going to do a bonus question. Below, in the description below, guys, put what you think Bybit could add. What's the best feature Bybit could add to the exchange which you think is valuable? I will do a winner. I will send a bundle of cryptocurrency to the best comment below out of my choice and the most likes basically it gets. Guys, hit the like button, subscribe to the channel, that kind of stuff. I do cryptocurrency content all the blimmin' time. And guys, we'll dive straight into the screens. I'm going to show you this Bybit tutorial right now. I'll see you in there now. Okay guys, let's go through this. I'm going to tell you everything you need to know about trading on Bybit, predominantly Bitcoin. We will look at some altcoins as well, but the first thing you're probably going to want to know how to do is basically how you deposit into the exchange. So what you do is you go to the top right, you click on assets. This is the main kind of homepage. This is where you're going to see all of your balances. Obviously, for just like obvious reasons, I haven't got my balances shown up. But what you do, guys, to actually deposit into the platform, choose the altcoin you want to use. So basically you can use Bitcoin, Ethereum, EOS, XRP, or USDT. And they do have perpetual swaps to US dollars as well, USD perpetual swaps and inverse perpetual swaps. I'm going to explain to you what those two mean in a second. But what you do is basically most of you got to be looking at Bitcoin. I actually use Bybit for Bitcoin the most because Bybit have they're one of the top exchanges in the world for liquidity. So you have very low slippage. They have very, very competitive fees in the platform. So you know that this exchange, you're going to get your orders in and out. So basically on Bybit, on Bitcoin, you click on deposit. You click on that button there. And then what you'll get is a pop-up on the screen saying how much Bitcoin do you actually want to deposit into Bybit. And at the moment, guys, Bybit are actually doing a massive bonus for depositing. I actually have a link below, guys. Use the link below. You can get up to a $600 bonus right now. I don't know what it will be when you're actually watching this video, but if you use the links below, guys, you actually get extra bonuses for depositing, and you get a trading bonus. So it will come up here. It will say like available balance, and then next to it will say trading bonus, and you can actually trade free money in the platform to get your trades in and out. But that's basically how you deposit, guys. You literally just click deposit, get your trading bonus. You use all the links below. So let's go actually on to the trading platform. So there are two types of trading on Bybit. Okay, let me just make this really simple. So inverse perpetual swaps, and you can also do USD perpetual swaps. So let me just make this really simple, guys. With inverse perpetual, it means you trade Bitcoin and you get paid out in more Bitcoin. You can also trade Ethereum, EOS, and XRP. So what you do is you deposit Bitcoin into the exchange. When you place a trade, you actually get your resulting P&L, whatever you make profit and loss, actually comes into your account in Bitcoin. So if you trade an inverse perpetual swap with Bitcoin, you get paid out in Bitcoin. But if you do a USD perpetual swap, right, you actually deposit US dollars, USDT, and then you can trade the volatility of Bitcoin, whether it goes up or down, and then your P&L, your profit and loss, will actually be realized in US dollars, not in Bitcoin. So it's basically a USD perpetual swap and an inverse perpetual swap to whatever coin you're using, so a Bitcoin perpetual swap. So make sure you do that. Just a little tip here from me, guys. In long markets, I like getting paid out in the asset I'm longing. In bear markets, in downside markets, I like getting paid out in US dollars, because obviously when you're in USD, it's actually almost like you're already shorting. So if you're shorting a market for downside, say Bitcoin, for it to go down, and you're getting paid out in US dollars and you're holding US dollars, you're almost double shorting it. And then when you get those USD at the end of it, you can actually buy back into the market for more Bitcoin than you would do if you were actually holding a inverse perpetual swap, because you're getting paid out in Bitcoin whilst the value of Bitcoin goes down. So a little tip there: long markets, inverse perpetual swaps; short markets, USD perpetual swaps. So right now you're looking at the screen, and this is actually Bitcoin perpetual swap. So when I place trades, buy long and sell short, I basically place Bitcoin in the trade and I get paid out. My P&L will be realized in Bitcoin, or I'll lose Bitcoin. So you can actually move around all this stuff as well. So it's very, very, very nice UX. You know, the user experience, the user interface is very, very nice on Bybit. You can completely customize it to what you want. It's definitely one of the strong points for Bybit, other than other exchanges, for retail people, like, you know, retail traders using the platform. So this is how I like it set up, guys. You can see on the left here, I've got my order book. So this is actually the sell side and the buy side. You can actually see the equilibrium between how many sellers and how many buyers there are with the market price in the middle. I also have recent trades down here, guys. So that actually just shows you can actually extend this to make it bigger as well if you want. But it basically shows you all of the recent trades coming into the books, the most recent trades, the longs and the shorts, the buys and the sells coming into the books. I really like that feature right there. I don't really need that much data within the way I run my strategy. I actually have more data outside of Bybit using TradingView. I'll put a link to TradingView as well. That's where I do most of my charting. But it's good to have obviously this built in so you can actually see the liquidity. And they've got really low slippage on Bybit, massive. There's so many traders on this platform now, so much volume going through the platform. You're going to get in and out very nice and easily. So the next thing as well, guys, here's the chart in the middle. You can do charting in this platform. What you do is you actually click this button here, this small little arrow. It'll actually come up with your trend lines, and you can basically draw on your trend lines. You can do all this kind of stuff here. You can actually do your pitchforks. It's actually basically just TradingView, right? Basically logged in. They actually have an API into TradingView. So this is basically TradingView in the middle. But it hasn't got all of the tools from TradingView Pro. It's just a basic version. You know, you got your measuring tools, all that kind of stuff. All the basic stuff you need, like, to actually get by. But personally, I actually use TradingView Pro and the higher tiers. I'll put a link to that in the description as well so you can get that. But this is the main way you can do some charting if you like. And you can see here, you can zoom in, very similar chart pattern. You know, at the end of the day, it's a candlestick chart, very simple. You can change it as well. You can do hollow candles. You can do Heikin-Ashi candles, line, area, baseline, bars, you name it. You can change all that sort of stuff. You guys can come and fiddle around with that in your own time. And guys, at the bottom here, you have your positions, you have closed P&L, all that kind of stuff. Very, very simple. So how do you actually place a trade on this? We're going to place a trade right now, guys. So say you're looking at this market, you've done some charting out and you think it's pretty decent. Say you just want to basically buy right now the price of the market and you want to go long. If you want to buy the exact price right now, guys, what you do is you actually make a market order. When you click market order, guys, and say you do one contract stands for $1. So if you do 1,000 contracts, that's $1,000 of Bitcoin. If you do 10,000 contracts, that's $10,000 of Bitcoin. If you do one contract, that's $1 of Bitcoin. So we're going to go into obviously the TP, the stop losses, and the take profits in a second. But just to make it really simple, guys, if you want to buy this price, exactly this price, and you want to pay basically a taker fee, you don't mind paying the fee, what you do, guys, is very simply you click buy long. Bang, you now have a trade on. It's actually a long trade in the market. Okay, when you market buy or market sell, you do incur a fee because you're actually a market taker. You're actually taking liquidity out of the market. And guys, obviously here as well, you can actually slide up your leverage. Now, just do a little bit explain about leverage. So, you know, a lot of people see leverage as like timesing up your gains. And yes, leverage can times up your gains. But if I was just to give you a little bit of a tip, I wouldn't look at leverage as a way to like 100x your money and make more money in trading. I would actually just use this as, you know, a way to kind of like limit your risk and alleviate a more available margin for you. Look at it like this, guys. If you want to buy, say, $10,000 worth of Bitcoin, just look at like leverage as this. If you have it on 2x, it basically means you only need $5,000 upfront money to buy $10,000 worth of Bitcoin, and it allows you then to use that other $5,000 you didn't put in on something else, another trade, put it in a high interest account, whatever you want to do, like trade it on a different exchange. But obviously, if you have basically 2x leverage on it, right? Let's just make an example. So you do a market order on 2 times leverage. You're buying one contract. You click buy. What you're going to get is this is the confirmation window. You can see here it's $1 worth of Bitcoin. It shows you the cost, the order value, and you can actually see here there's a liquidation price. Now, the higher the leverage you're using, the higher that liquidation price is going to be. So if I have this order on, if I buy this and click confirm, right, it basically means that if the price of Bitcoin goes down to $22,000, that $1 worth of, obviously it's just an example, that one contract will get liquidated. The higher this goes, if I put it all the way to 25x, you're going to see that now the liquidation price is $32,000. So what I'm saying is, as you raise the leverage, your liquidation price goes up, but the amount of Bitcoin you need as collateral to buy that amount of Bitcoin goes down, and then it alleviates my margin. So now I need 25 times less basically money to get that one contract, right? Because if it's on 2x, I need half. So like I said before, if I want to buy $10,000 worth of Bitcoin, I only need $5,000 to get it. If I slide up to 25x, that means I literally need 25 times less. I literally need like such a small amount of upfront capital to get that $10,000 worth of Bitcoin, but I get liquidated at a higher price. So it's a risk management tool, and I use it. The only way I really use it, guys, I wouldn't recommend using any more than like 5x. the only way I would use it is basically if you have a position which goes into massive profit, slide it up to some decent leverage, and then you can actually use the money which you have as collateral to buy that Bitcoin. You can actually alleviate it. You can actually make it more liquid again. You can make it liquid money and then place another trade basically. Now, like I said before, guys, the order I just did was a market order. So when you do a market order, you're basically just buying the next appropriate price in the order books, and you pay fees for doing that. If you do a market order, when the order is actually in and you've actually got the order in the books, right? You've actually got a position open on the market. What you can do is if you want to add a stop loss or a take profit or a trailing stop, what you do is you actually click this here, and you click this little arrow here. It's kind of like a pencil. You click on it and you'll get this little box which will come up in the middle of your screen. Now, TP stands for take profit, SL stands for stop loss, trailing stop obviously is just the stop loss gradually goes with the price at a certain level depending on what you choose. And then activation price USD as well. So basically with a take profit, you can choose when you want to take profit. Do you want to take it when it's 25% in profit? Do you want to take it when it's 50% in profit? What you can also do is choose the price you actually just want. So say you want to take profit at $40,000. When Bitcoin goes to 40K, that's when I'm going to take profit. You click confirm. So as you can see here, it says $40,000 will be my take profit. And guys, you see this button at the top right here. You actually have to have this checked on. So you can click it off when you can see your position on the screen. You can take it off if you don't want it. But if you leave it on, you can actually see where your take profit is. So it shows you where your entry position is. There's my entry position. Here is my take profit. You can slide that on the screen as well. And guys, vice versa as well. If you do stop loss, you click on SL and you do like say, I don't want to lose any more than 15% on this trade. You click confirm, it will show you your stop loss. So say for instance, you have your stop loss here, your take profit there. And then if you do your measuring tool, you can see that, this is the kind of potential trade you're looking at. Just to mention as well, trailing stop. So what you do is you actually just set a stop loss. And if you put on like, okay, say 500, right? That means that if the price drops $500, right, it's going to get tagged. So if it goes up and it drops $500 from wherever the price is you started your trailing stop. So say the price goes like this, it keeps going up and up and up and up and up like that. You can't really see that line there, but what I'm saying is that wherever the price is, if it drops $500, then your stop will get triggered, but it will follow the price as it rises. So it's quite a tight stop anyway. And you can actually go on here as well, click on this, and then click X and get rid of your trading stops as well. Now, let me just get rid of this trade. Obviously, I'll just mark it out of it. I don't need this trade on, so it's only $1 blimmin'. Who cares? So the other side of the thing is doing limit orders. Now, there's a few things you want to know about limit orders, because when you limit order, you're basically actually creating the market. So what you're doing is if you want to say in the future, you think Bitcoin's going to drop down and you want to buy a future price, what you do is you click on limit, you go up here, you click on your price, whatever price you want to get in. So say you think that Bitcoin's going to go to $30,000. You just type in 30,000. You type in the quantity you want. Just for argument's sake, guys, you can do 10,000 contracts. You can buy however much amount of freaking Bitcoin you want. You can buy $10,000, $1, whatever. Just for this example, we'll do $1. And what you could do is you can actually buy that price. So actually, if you just click on limit order, you can click buy price. It will then show you this little thing here. It will tell you what your liquidation price is. Obviously, I'm low leverage. And you click confirm, and that put your order in. So now what I have here is an order which is basically placed into it for the future. So I think that Bitcoin's going to trade lower. Now I have a position, I have a bid basically, which says that if the price comes to $30,000, I will buy that price. Now, few things to mention, guys. You can have a post-only order, limit order, or you can have a reduce-only order. Now, these are actually very, very important to know what these do. Now, just to give you a quick example, post-only basically means that if you're going to have a trade, which you're going to have a limit order, so let's do it again. Let's just limit in at that price again. You have post-only on. If you have post-only on, guys, it means that that trade, when this actually gets executed, you're actually going to get a market maker rebate. You're actually going to get rewarded for creating liquidity on the exchange. Creating liquidity, you're going to get a rebate for that. What it basically allows you to do, it allows you to manage your trading fees easier, especially if you're scalping or if you're doing high volume trades. It actually says it on the website, and it basically allows you to have a little bit more control over your fees. Post only, you get rewarded. So if you limit in then limit out, you actually get paid the other side. So usually people with it off will pay fees because their order, the limit order will if your price of your limit order gets tagged, it will actually find you a market order if it's not there. So if you have a limit order on a price which isn't there, it'll actually market you in at the next price, and you actually pay market fees for that. But post only means that you'll only be executed. Your order will only be executed on the price you're asking for. So what you're doing is you're creating the market. You're a market maker, and in turn you get rewarded for that. The other side of the coin is this. Reduce only is slightly different. So if you have an order, so guys, I just quickly set this up. So basically reduce only means this. When you have an order in the book already, so I have a long from this price here, around $34,000. Reduce only means you can use it. So when the price actually rises and hits this, it's basically a take profit in a way. But the only thing this order can do is reduce your already open position size. So say I drag this below here and I click confirm. Basically, that means that the price got hit and it actually just reduces your size. So reduce only means you can only reduce your position sizes. Post on only means that when you actually have a limit order in the book, you actually get rewarded for it. So just make sure you know that, because not many people mention this, guys. It's actually very important. They're very, very useful as well. You can use them in your strategy. Post only you actually get rewarded for a market maker. And then you got conditional orders, guys, where you can actually put in a whole variety of different things, trigger prices, that kind of stuff. So as you can see here, guys, you can actually choose what price you want to market in at. So you can actually market in at $30,000. You can do a market order there, or you can do a limit order there, right? You can choose when you want to trigger it in. You can do your last index or mark price, and then you can choose your quantity, guys, so how much you want to do. So you can do your 10% of your portfolio, 25%, the quantity in there as well. But ideally, guys, you basically want to be limiting in and limiting out with post only. That's the best way to pay the least fees, but it's not always as simple as that, guys. If you can't get that, then try and market in then limit out, or limit in then market out, because at least then if you have post only on, you're going to be paying no fees for your limit out. You're actually going to be a market maker, and you want to try and reduce fees, guys, especially if you're using big sizes. The more you can reduce fees, the better, because the more profitable you'll be in the long run. But moving on to the next thing, guys. So funding. So guys, funding basically means that right now it says 0.01% funding. That means that long positions right now are paying a fee to the other side of the trades, or basically the shorts. Longs are paying shorts right now 0.1% of your position. So if you have a long order open right now, a small fraction of that will get taken to fund the other side of the shorts. Now this can change, guys. This dynamic can change a lot. It's a way of balancing out the books, but when there's loads of longs in the market, usually longs pay shorts, and when there's loads of shorts in the market, shorts pay longs. It balances out the books, that kind of stuff. And then you've got your 24-hour turnover, you got your 24-hour lows. They also offer a product where you can actually buy basically cryptocurrency just with your card, so a fiat gateway. So if you actually want to get into cryptocurrency and buy Bitcoin, you can literally just come here and buy $1,000 worth of freaking Bitcoin, click buy now with your card, and then you can actually use that money to trade in the markets as well. So they make it super easy to onboard people into the space as well. And they do this huge rewards hub thing where you can actually get a whole host of different bonuses for doing tasks within the platform. Guys, like I said, use the link below. You actually get up to, you can actually get up to $600 bonus right now. It's usually about $200, but it's like $600 right now. And overall, you can get those bonuses, start trading. Obviously, guys, trade safe. Use risk management. I would say personally for you, if you are going to limit in, only allow yourself to lose probably 1% of your whole portfolio on each trade. So the 1% rule, you can push it up to 5% if you want to be more risky, but overall, if you want to be a long-term trader, try and go for that 1% rule, risk management. And overall, guys, that's pretty much the exchange. Come and check it out yourself, guys, and I will basically see you there. All the links are below, and I will see you guys in the next video. Have a good day, guys. Cheers.